thank you for joining another episode of Fintech Talks. Today, we have an exciting conversation prepared for the folks that have listened in from time to time. We are bringing together the brightest, brilliant minds in the fintech and payments industries in for a conversation with the Fintech Academy, which our target is educating and helping cultivate the next generation of fintech talent. And so, where those two pieces converge, we have a very informative conversation. And today, we have Greg Johnson, who is co-founder and CEO of Rubicon Crypto, on the line. And so, Greg, so excited to have you here with us today.
It's terrific to be with you, Laura. Thank you.
We also have Tyler Acree, who I have known for the past few years, especially during my transition into the Fintech Academy from the industry. Tyler is a brilliant fintech professional. But first, I used to say fintech student. Now I'm like, he's a fintech professional, killing it in the industry, came from UGA, graduated, and has continued to make investments and paying it forward, I should say, in next gen. He is also one of the chairs of the Alumni Council for the Fintech Academy, which we're really excited to get kicked off again here in the next week or so. So, Tyler, really excited to have you on the call today as well.
Yeah, thank you.
So we're going to start off with a little bit of introductions, and I'll toss it over to Greg. Can you just introduce yourself? Tell us a little bit about your background.
I'm happy to do that, Laura. As I said, it's a pleasure to be with you and join your audience. And look, I've been very, very fortunate to have a very varied career. Look, the first 20 or so years of my professional life was with American Express, and I had the opportunity to work both in the payments and in the wealth management sides of their businesses. And I think that was an incredible foundation, maybe even for this conversation. And indeed, that time really set the foundation for me to be open-minded to so many of the future of finance, the digital assets, the crypto conversations, the tokenization conversations that are dominating the headlines and quite frankly are inescapable to anybody that's participating in the fintech industry as we would think about it today. So I did that for the first portion of my career, but over the last 7 or 8 years, I've been dividing my time between a couple of different things. So one of those is working both as an asset manager in digital assets, but primarily in advisory and consulting in the crypto and digital asset space. I'm on the faculty as a professor at NYU, where I teach in the master's in financial planning curriculum. And of course, that touches on fintech and digital assets, especially looking forward. And then I also have the very good fortune and the privilege to participate in several important organizations in Washington, D.C. that frankly are directly related to this conversation. I'm on the advisory council of something called the Bretton Woods Committee. I'm also a member of the Atlantic Council in their Middle East initiatives. And I have also the good fortune of being a part of the Digital Dollar Project. So all of those touch in some way, shape, or form on the topics of fintech. And we might be able to weave those into the conversation today. So thank you.
Greg, you're very much plugged into the, I guess, influencer, I should say, kind of aspects of where the industry is headed. So I know there's a lot of gems that we'll cover later in this conversation. Tyler, give a little bit about your background and maybe give the audience an update on where you are now.
Yeah, so I graduated from University of Georgia, supporting the dogs right here in my background. Was in the finance program and also was the first inaugural fintech certificate class to graduate from there. Shout out to Professor Trotter. I really enjoyed my time, was interested in a consulting route, ended up landing a really cool internship my junior year at a blockchain startup company that was doing verification services. Fell in love with fintech, was grateful enough to be one of the founders of the fintech program, the student club. I went on and to work at NCR and some of their international banking services related to ATMs and the ATM software. I spent a few years in consulting. We did some cool consulting projects in the Middle East, Greg. So that was really fun, more focused on banking user experience. And now I am doing project management for some of our banking software. So really enjoyed it and now have the ability to restart the Alumni Council for the Georgia Fintech Academy.
Perfect. That's so exciting. And I love the tie into the conversation that we're talking about today. Greg, kind of just a quick icebreaker. At what point did you say, oh, crypto's here, it's not going away?
That question. Well, first of all, the first time I heard about blockchain or kind of the crypto industry was back in 2014, and let's just say I was not impressed. I heard about it in the context of the insurtech industry, and there's quite a bit that's related and overlapped with fintech and insurtech, all the hashtags, if you will. And I heard one of the founders of a novel insurance company at the time, now of course a massive unicorn, called Lemonade Insurance, and they had a very novel idea that you didn't need to have all the brick and mortar, the traditional way to scale an insurance company. And in a breakout session, I heard one of the founders in his heavy Israeli accent talk about, we're also very interested in the blockchain and the powers that could bring. I'm like, what? What are you talking about? So I definitely started digging in then. But as a traditional financial advisor, wealth management, CFP, I was very, very dismissive of what seemed very gimmicky about the crypto industry. So many of the things that we've unfortunately heard about crypto, in fact, part of the reason why we still only have, at best, 18% of American investors participating or hold crypto or transacting in crypto is because the industry has been dominated by charlatans and modern day swindlers that we've seen in financial services for the last 1,000 years. There's always scammers, there's always bad actors, but unfortunately, crypto has done more than its fair share to shoot itself in the foot. So I was very cynical. But eventually, I really started to believe that it was just a natural progression of things. In fact, crypto and tokenized assets, which are becoming extremely popular right now, was the natural order, the very, very predictable evolution of global financial services. And I think it probably took me a few more years to come to that conclusion. And I think we're just getting started. For anybody who thinks this is the middle of the game or halftime, or I think they're very much mistaken. I think we're very, very early, maybe not for Bitcoin per se, as lots of people want to speculate, but in terms of the transformative implications. And by the way, Laura, when we talk about fintech, it is interesting to me that we are largely broadcasting here in Georgia, a global fintech hub. You go to Saudi Arabia, you go to the Middle East, people know and recognize Atlanta as being an important, they're more cognizant of the fact that Atlanta is a fintech hub than we are here in Atlanta. And I found it very interesting, although somewhat predictable, that fintech writ large dismissed crypto, and rather than seeing it as the natural extension of their efforts. And I think we're going to talk about this, but there have been big changes this year that are rewriting that. Certainly things I'll speak about at FinTech South in a couple of weeks and all of that.
Oh, I know. I don't want to spoil that part of the conversation, but you're right, Greg. There's been some changes, which is kind of what sparked this conversation. We, have been focused on blockchain for quite some time from a FinTech Academy curriculum.
Yes.
And where there's been some hesitancy from an industry, it's caused some, stop, go kind of pattern in the academic arena as far as like, where do you educate, the next generation kind of pursuing careers in areas that are most relevant for their career, the field of choice. Sure. But yeah, we'll save that for later in this conversation. Tyler, I don't know if you have any questions primed up for yourself.
Yeah. How did you make the pair essentially? It sounds like you have the financial advisor type of background and now like where crypto's at today. I'm curious if we can hop to this. Like, what do you think that looks like from a portfolio perspective for someone? I know obviously I'm 27. My risk tolerance is a lot different than everyone's, but a lot of things I see that is, I guess, a lot of friction when it comes to this space is how much allocation do people have and things like that. I'm just curious to hear your thoughts with your background.
Thank you for the question. It's a really good question. And the question and my answer, if you ask me this in 6 months, I think it could be significantly different. Mm-hmm. If you asked me 6 months ago, my answer would be different. But I'll speak to kind of where we stand right now. We as, look, as Americans, it's a very privileged place to be when contemplating new investments, newfangled ways of doing things. So, for example, the whole notion of Bitcoin, we're not going to get into a discussion of what is Bitcoin and how does it work and all of that. That's another conversation. But in general, places around the world are not as cynical about Bitcoin and its potential value because we've been number one. You know, when you are the global reserve currency, and with all of the erosion to that you might be hearing about in the headlines, the United States is still the coin of the land. The US dollar is still, even in its eroded state, it is still the dominant currency. We've been number one. But if we were doing this from one of another 35, 40 countries that have experienced hyperinflation, and I asked the question, you know, how can Bitcoin be worth anything if it's not backed up by the government? To an American audience, they're like, yeah, how could it be? If you ask that to somebody in Venezuela, Argentina, Israel, Hungary, you name it, 40 other countries who have experienced hyperinflation, they could care less about whether or not their currency is backed up by the government because it's been worthless. And so we have a very privileged, unique lens onto these future currencies and indeed crypto assets. I think that's number one. Number two, the US markets are the most desirable capital markets in the world, and they are because of two things: regulation and stability. And I absolutely look back at the previous SEC administration run by Chairman Gary Gensler with great disappointment at a missed opportunity. And while well-intended as he may have been to protect American investors, quite frankly, there were different ways we could have gone about doing that. And I do see regardless of where your politics are, regardless of what side of the partisan aisle a viewer or a listener may sit, this much is non-negotiable. It's not, you can't even argue it. Since the Trump administration 2.0 took place earlier this year, there has never been an industry ever in American politics where a political interest group, a lobbying interest that supported a candidate at the top of the ticket has received so much, so quickly, so deeply, so broadly in the history of modern American politics. The crypto industry has received literally everything on its Christmas list and then some. What does that matter to your question, Tyler, which is a really good question, is because without the regulatory law that we just received just on stablecoins alone a couple of weeks ago, the ability for these large institutions and banks to offer crypto products was never going to happen. Now, there is the law for stablecoins, the likely passing of something called the Clarity Act, which would also add additional federal law about who regulates what and how and definitions. All of that then allows for the US capital markets to go deep into crypto at a level we're just scratching right now. So when that happens, it goes back to your question, then you'll start to see more and more American households own a sleeve of crypto. Crypto should be considered like any other alternative asset class. So we have in traditional wealth management, we have something called our alternative investments, alternative asset classes. And that's where digital assets fall. Okay? If you're younger and you're more risk tolerant, well, that's great. Maybe you have more. Most American investors, they should start with a small sleeve and work their way from there. So
that's awesome.
I think that was a long answer to a short question, but that's what you're going to get with me.
No, I appreciate this. I won't tell you how much my percentage of my net worth is in Bitcoin, but that's because it's grown tremendously. But that's one thing personally I love to think about my friends too is, do you cut some of your positions? How much do you diversify? Things like that.
Well, I don't know that this is the place for investment advice. In fact, I know that it's not. But just in general, You need to think about the utility of anything that you're holding as an investment position. Let's be very clear. If you're a Bitcoin OG, if you were a Bitcoin maximalist, you're happy with the price, but you're disgusted by what's happened to Bitcoin right now. And what really attracted me to the industry was the incredible abundance of irony that exists with the crypto and digital asset industry. So for example, You have a white paper that's created during the height of the global financial crisis that says, you know what, given the number of people that have computers, meaning decentralized compute, and the technology capabilities that we have right now today, and borrowing from some of the early experiments with hashing, that had gone on before, we can tie all those things together, and we don't need to rely on centralized parties anymore to exchange value. And that was a very noble thought, which has been completely co-opted by the very centralized institutions Bitcoin was created to ignore and avoid. Mm. And I always believed that you would require, in order to get crypto into permanent orbit, you needed a booster rocket to get it there. And with all due respect to the original engineers behind the protocols, behind these blockchains, they needed centralized adoption. They needed centralized institutions to take that payload and put it into orbit. Again, I think for each of the digital asset holdings somebody might have, you need to think about what's the utility. Is there an actual utility? And by the way, in most cases of the thousands of projects, they've underwhelmed. They have not lived up to the hype. And this is coming from somebody that is, bought in completely as to digital assets tokenization as the future of finance on multiple levels. Now, we can go really deep here. And if you don't believe me, look at the experimentation going on at central banks. Look at the experimentation taking place at something called the Bank for International Settlements. And so if you care about fintech and you don't know what the Bank for International Settlements is, the BIS, then you are not as engaged in your profession as you need to be. The central bank of central banks in the United States, you hear a lot of talk about the Fed. Well, the top 55 largest economies in the world have their own central bank. It's located in Switzerland, in Basel. It's called the Bank for International Settlements. So it's one of the oldest, most institutional bureaucracies. They're not supportive of crypto, but they realize the power that the crypto conversation has unleashed. And actually, some of the smartest people on decentralization, on crypto, are working at the oldest and most stodgy, not dodgy, some might say dodgy, but stodgy institutions. That's where this incredible innovation is coming from. And it's quite ironic. There's that word again. It's very ironic. Cue the Alanis Morissette, Laura. Cue that song. Right
Isn't
there.
It ironic?
Sorry. Yeah.
No, this is good, Laura. I don't want to derail the conversation you had. I did have a question about the stablecoin regulation, if you don't mind.
Yeah, go ahead.
So I was curious, that just came out a few weeks ago. From my understanding, it's a pretty big deal. And you can correct me if I'm wrong. I think Tether owns a large portion of the U.S. treasuries, things of that nature, in their of the stablecoin. I was curious, this is a big deal from my understanding. What are your thoughts on that? And you said there's something called the Clarity Act.
Yeah, for two separate, but both pieces of legislation. You're talking about the Genius Act, which was actually with the stroke of a Sharpie from President Trump's desk 2 weeks ago. It's not just a big deal. I think what people will look back upon this particular law, because it is the United States and because we are the capital of capital. We have the largest capital markets in the world. We are at the epicenter of fintech innovation. And so anything that happens in the United States, at least for now, it's a bigger deal than if it happened in El Salvador, Guatemala, or any other fun crypto destinations. It's a massive deal. And Tyler, I would go so far as to say that it may be the most important law in the history of global banking and finance. That's how big of a deal it is.
This one that just passed.
It legitimized not the entire industry, but what has become, like it or not, the killer application. Some of the people participating or viewing or listening to this conversation may not even know what a stablecoin is, but just a real quick 101 on stablecoins. Stablecoins were developed for the decentralized world. There was no thought at any point that we're gonna be excited about one day the United States will have a law that basically legitimizes stablecoins. That's not what it was about. It was basically a bunch of DeFi degens who were like saying, man, this crypto stuff, when I want to move from one chain to another or transfer value from one project to another on chain, it's even too volatile for me. I'm losing value, in many cases, not benefiting when I want to move from one project to another. We need to create a digital asset used to transfer value between different projects that's pegged to something stable. What shall we use? How about the US dollar? Okay. And so that was really what was birthed. It was not supposed to be for the TradFi fintech world. And yet, anybody in fintech, if you can't recite what I just did, what are you doing? There is nothing that is more important to your future success, both directly or indirectly, as you think about go-to-market strategy, as you think about your own internal compliance, as you think about how you're going to be hiring in the future, as you think about existing customers and whether or not they're as sticky as you thought. You need to be fluent on the future of payments, and that now 100% includes stablecoins. And so a funny thing happened on the way to decentralization is that banks and other centralized institutions said, you know what? These stablecoin things, we could use them for our global payments. We've got a cross-border business. We're Coca-Cola. We're a bank. We have operations in 40 different countries. We can actually do payroll instantaneously. We don't have to use Swift. We don't have to use these old archaic systems. And it's TradFi, again, co-opting from crypto and digital because they saw utility there. So this is one of those wacky, again, ironies that nobody expected to happen. The Genius Act is literally one of the most important things because what does it also mean? It means that any business that's not a banking or a financial service or a payments company is going to have to now start paying attention to what Tyler was paying attention to in 2019 and 2020 when he was loitering in Scotland working in the DeFi industry. You know what I mean? Yeah. So all these banks, all these regionals, all these companies like consumer goods companies, Dick's Sporting Goods, you name it. Every board, every executive team now has to say, you've got to be kidding me. You mean to tell me on top of AI and this stupid quantum stuff, I have to now think about my treasury differently? Yes. So if you're in fintech, you need to be dialed into this because it is not going away.
I could talk all day to you. Just one clarification I wanted to make. You said it was one of the most significant regulations that come out recently. From my understanding, it's because that stablecoin bill that the current administration signed a few weeks ago, it doesn't it have reserve requirements for each stablecoin, thus
yeah.
verifies, or it makes it more, but I guess the banks can now say it's more safe because there's a requirements that other banks have. They have reserve requirements as well.
So you're asking really good questions and bringing up points. Mostly what you said is 100% accurate. Look, one of the knocks around stablecoins has been no one is opened themselves up to a full audit before. So if you're a regulated financial institution doing business or a bank here in the United States or somebody that's making their business the business of debt instruments of the US government, treasuries of all durations, etc., you have to have complete transparency. You have to be, regulators have to look in and kind of see what's available, et cetera, in your holdings. Otherwise, maybe you're not as stable as you're letting consumers to believe, and that's not good. Listen, stability is underrated, right? The stability we take for granted is underrated. And so, for example, the largest stablecoin in the world, everyone talks about Circle these days, which is a new publicly traded company. They had an IPO. It was wildly successful. They're American-based. Tether is by far, though, the largest of these stablecoins. And for many years, they refused to open up their books. We won't have time for this, but 3 weeks ago, Tether announced that part of their backing is $8 billion worth of gold bullion. Now, isn't that ironic? You got to be kidding me. You've got $8 billion worth of gold bars in Switzerland in a vault. How old school is new school? I mean, it's ridiculous, really, when you think about it. But until very recently, until this Genius Act, only the state of New York had laws around stablecoins under the New York Department of Financial Services. And so it mandates what duration of holding, the type and percentage in your portfolio as a stablecoin provider, what can be in it, what can't, et cetera, et cetera. By the way, fun fact, if I said to you, what's the sixth largest currency in circulation? It's a trick question because most people, especially in TradFi banking, they wouldn't even think of it this way, but it's actually Tether. Tether is the sixth largest currency in circulation globally right now, just to give you an idea. So that's why we're spending so much time of this fine podcast talking about stable coins. And so if that's how big a currency is in the global payments and you're in fintech and fintech has something to do with payments, duh, then don't you think you ought to at least be conversational at the dinner party, at the beer garden, wherever it is you're loitering, you'll be able to talk about this. It's not going away. That's what I'm trying to say.
I agree.
And I have a practical question, I guess, in regards to some of the things that you've mentioned, highlighted. We've been pushing out some content so students can research further and kind of take away some action to educate themselves. And you mentioned, the white paper around decentralization. We've got our hands on that. We recently distributed a copy of the Genius Act. I'm wondering if there are any other resources that come to mind, or even text, any books that you would recommend for students to research and read?
Look, I picked on him a little bit, but if you really want to start your education deep in the tech about blockchain, I would argue that one of the best ways to do it is you can take the online open source class at MIT Sloan that was taught by the aforementioned former head of the SEC, Gary Gensler. Now, this class was done in the fall of 2018, I want to say, and about 25% of it is kind of archaeological, meaning it's like it's history. We've moved on from that. The foundation taught in those episodes is extremely important. And say what you will about the former commissioner, he is a gifted financial mind, a brilliant, brilliant individual. And he has an ability, quite frankly, in the classroom setting. And I tip my hat to him as a lecturer, as a university faculty member. He has an ability to distill these topics down to a way that I think most people that are listening to this conversation could do. So that's available for free. And then, listen, plug in. There's content everywhere, absolutely everywhere. I think from the traditional financial media places, there's great content coming from Bloomberg on crypto on a regular basis, also from Fortune and all of its distributed platforms if you're more of a kind of a traditionalist, if you will. And then there's a never-ending source of updates that you can find. I think the go-to for many people in crypto that are just looking for news headlines and opinion, CoinDesk is a destination that still, I think, a lot of people in crypto and digital assets will go to. And I have no pecuniary interest in any of those entities that I've mentioned, including MIT.
Okay. Thank you for the disclaimer there.
Yeah.
I never heard of CoinDesk. I actually recently set up an RSS feed, so I'm pulling news.
CoinDesk. Yeah, well, that's a great way to do it. Laura, what you said is brilliant. CoinDesk is a media outlet that was originally seeded by an Emory University graduate who runs an outfit called Digital Currency Group, Barry Silbert. And he's been an early investor in multiple massive crypto ventures and has ties here to higher education in Atlanta. So that'll give you an idea, a good start.
Oh, that's perfect. Thank you for that. So I know I mentioned this when we were prepping for this call, but Fintech South's right around the corner. Yeah. So August 18th and the 20th, coming up in just a few weeks from the moment that we're having this conversation. Greg, you're bringing some insights. What is your, I guess, goal in kind of facilitating a similar conversation we're having now to a very professional audience? What are you looking to get out of the event?
I'm not surprised by it, but I think most people would be surprised at the lack of attention and awareness that the fintech community, traditional fintech community has had with respect to digital assets, crypto, the whole industry writ large. And it's a shockingly huge knowledge gap. And the one thing, my one goal is to wake up the fintech community and say, you've looked at crypto as a competitor rather than an enabler. And you should have been rooting all along for responsible digital asset success, because what that would do is open up more opportunities for you. I think some of the fintech folks get it. They're largely the big payment folks. Do you think, how happy are you, do you think, if you're PayPal, if you're Stripe? You're really wicked happy, because this is opening up so many new verticals for you to explore. And I think it's not just relegated to those bigger firms, but I think they've been a little bit more strategic and sober thinking about it. And it doesn't mean all crypto good. As a matter of fact, I am one of the harshest critics about the crypto and digital asset industry because it's deserving of it.
Yeah.
And that doesn't, two things can be true at the same time. And the second part of that is that you cannot ignore, if I'm saying if you're a traditional bank and financial TradFi institution, and I'm arguing that you can no longer ignore these developments, then that is especially true for a company or an executive, a lady or gent participating in fintech of any stage. So that's really going to be my goal, is to try and wake people up and provide a perspective that maybe gets people to say, oh, okay, geez, you're right. I gotta lean into this.
There's some players in this space that kind of made it gimmicky.
Yeah.
And maybe there is a little bit of a misconception, some education, everything that you mentioned that's very much necessary at the highest levels across the industry. And so for our students, I think this is an opportunity for students to educate themselves and, become competitive in the market, maybe identify opportunities that didn't exist previously. What are your
Laura,
thoughts?
it's a life preserver, quite frankly. I couldn't agree with you more violently. The reality is, this is going to be an extremely important competitive differentiator. It's tough out there. It's hard out there. And, you're going to be competing against technological disruption as well as other human beings for roles and where you're going to make a professional contribution. Not everyone's going to be an influencer. Not everyone's going to be a startup founder. And so you're going to have to contribute, for the first time in the knowledge economy and actually deliver differentiation. One way to do that is to become as fluent as I am on these topics. And that may seem like a tall ask. It's not. You got to put the work in like I did.
Yeah.
I wasn't blessed and ordained with divine insight into fintech and crypto. I saw something happening and put in 100 hours a week trying to make sure that I had a Swiss Army-like education, an education that I can go into the deep end in most topics and shallow end in enough of the others that I think are important. And that would be the advice I would give to anybody that's, in the academy level, that's in a student level. It's certainly the advice I'm giving to my own children, and it's certainly the advice I'm giving to my NYU students presently.
Oh, that's such a great way to wrap up this conversation with some inspirational message to kind of keep this going, keep the conversations going, look at some of the resources that Greg highlighted. Tyler, thank you so much for participating in the conversation today. Greg, we're going to put in the show notes a link to, the company that you represent and to your LinkedIn, if you don't mind, recommending people to follow you as you, are quite active in the industry as well. So any parting thoughts that you have, Greg, for our audience before we wrap up?
Just a small, not big statement here. I will share something devoid of any hyperbole. There has never been a better time to be a human being if you're interested in big things. This is a moment that we've never seen. The everything, everywhere, all at once notion of disruption is taking place right now, right before our eyes. And so for those of you that are willing to roll up your sleeves, to dig in, to challenge your level of acumen on many, many different topics, the rewards will be exponential. And if you don't, whether or not it's with computational intelligence or AI, or whether or not it's with digital assets or the other disruptive technologies coming from the realm of quantum, you will miss out on a massive, massive opportunity. So no hyperbole there at all, but I can make the case.
Thank you, Greg. Thank you, Tyler. And thank you all for listening in. Keep tuned for some more content coming from us. So we look forward to connecting with you again.
Thanks for having me, Laura. Thank you. Thanks, Tyler.